a recent SEBI study has also found that 9 out of 10 people actually lose money in F&O. And here we are talking about extending trading hours also for F&O. So how does that sort of work out?
No, it's again, both are, in a way, you may think it is connected, but basically retail investors should not be participating in derivatives. Now, having said that, the longer hours are for the sake that in case the news happens, because today we trade only 6 hours, the rest of the world started automating after us, but they all run 24 hours. Why? Is because news doesn't happen during the market time only. Some news, some war coming out or some earthquake happening doesn't have to happen between 9:15 and 3:30. It can happen at 8 in the evening or it can happen in 7 in the evening. So when people want to work on a news, they have no choice. Foreigners have a choice because Indian products are traded abroad also. So that's where they are able to hedge their products. But we are trying to tell, or some of us are trying to tell that because I want to be in front of the screen every time the market opens or market stays open, uh, market cannot go beyond 6 hours, otherwise I will get tired. So that's why you cannot go about 6 hours. So I say if people are losing money in some ways, idea is to take them out from that market. But strategically, which country will allow its most important asset today? $3.8 trillion is 1 out of every 3 rupees Indians consider as wealth. One third of India's wealth is now represented. And if 18 out of 24 hours, the pricing of that asset is done under some other regulator, we are having a strategic problem, boss. Right? And that's where, as long as possible, if you have ability for the professional traders, the professional hedgers to actually use that information coming in to take positions, that allows the regulators to control the markets better. And people don't have to be there on the screen every moment because they are not supposed to trade so long for nothing, right?
Talking of news-driven developments and the markets, Ashish, you know, we've recently seen earlier this year and afterwards as well, these huge fluctuations in the Adani pack, for instance, based on some news-driven developments. Now, despite all the technology, despite all the warnings the exchanges introduces, margins and all of that, how do you think this will affect particularly the younger lot which is coming? What is the kind of way out of this to prevent them from these huge swings in the market?
So in a way, the volatility is going to increase across the world because the news flow is happening faster. The actions are happening faster because the technological changes are happening faster. So companies which were very small earlier are becoming large faster. Earlier, a company would take, say, 20 years to reach a large scale. But IT companies reach those scales in probably 10, 15 years. And some other companies are now becoming very large in 2 to 3 years, right? So that's where the news flow is going to be also faster. Volatility is going to be here to stay. And India is connected to the world in a much larger way today. If you take India's exports plus imports, which is what tells you the total trade, is now almost more than one third of our total GDP, right? Almost, right? And that is like large connect to the world. So whatever happens in rest of the world will continue to happen here. And so we may think that how much do we trade? We trade a lot now. Although we import, but we export a lot of services, right? So effectively, everything is connected and those things will continue. The volatility will be higher. And that's where...
Does that mean a greater challenge for regulators and exchange authorities like yours, clearly, right?
No, it is. And that's where basically what we try to do is first to save the system by having settlement guarantee fund in the middle so that no such defaults, like I told about MS shoes, happens. And then for individuals, we try to create regulations and other things saying that who can invest in such products or who cannot invest in such products. And of course, we try to also do a lot of investor awareness seminars. Between the two exchanges, we do more than 20,000 investor awareness seminars, and probably it'll increase. But the kind of numbers we deal with is even larger, and so every time you fall short. But using this kind of platforms, we also try to tell all the investors that try to stay longer, try to diversify. If you don't have time to study all these things continuously, go through mutual funds, go through ETFs, so that you get to participate in India's growth. Because if India grows, the companies will make profits which are more, your share prices will overall increase. Sometimes they go down, but largely over next 40, 50 years, if you think India is going to grow well, then stock markets will give you better returns. And if you don't want to study or don't have time, please go through mutual funds, go through ETFs, go through even portfolio managers or some financial advisors so that you get the right advice. But please don't trade in derivatives if you are not expert.